Good morning, everyone. My name is Paul Purdue, and I am a nerd. And today you are attending an Attorney Computer Systems webinar on using the integrated accounting functionality within Tabs 3. I guess I shouldn't say within Tabs 3 because the 3 extra programs are just that. They are add-on programs that get purchased separately and then are hooked in properly, we hope, so that they pass data from one place to another. And that's what we're going to focus on today. We're going to talk about how the integration works, what integrates with what causes the integration to happen, so that people can get a good overview of how that works. Now, some of the people attending today have the integrated accounting, so I'm assuming that they're attending to make sure that they're taking advantage of all the functionality and features that are afforded to them. Others have tabs but don't have the integrated accounting, so I'm sure they're attending to look and see what it might be like to change from using something else for your accounting like QuickBooks to the integrated functions that will alleviate the need to enter things more than once. And then of course we have a couple people attending today that don't have anything, so they're probably looking at this whole thing with the widest of eyes, wondering what it's all about. Now before we get started, a little bit of housekeeping. You have something that looks like this on your screen, or else you did. If you don't anymore, then you know what I'm about to say. But for those of you who are new to this, this is the GoToWebinar control panel. It is what you use to communicate with us. Now, this button will appear on the left, and it looks like an arrow pointing to the right, and it is an arrow pointing to the right. And if you press it, it will get this big screen out of the way. Now, you don't have to get this panel out of the way, but if it's covering up the my screen, then you might want to, just so you can be sure to see everything that there is to see. Once this is collapsed or removed from your screen, this button will turn into a similar button, but the arrow will point to the left. And clicking it again will cause this to come back into focus. That's where you'll type a question. If you're feeling shy but you have a question you want to ask, you can type it right here. Leanne, our humble moderator, will interrupt me at just the right time, ask your question on your behalf, and if you do have follow-up questions while Leanne is asking or I am answering, simply keep typing here and keep hitting the send button so that she'll keep seeing your follow-up questions, and she will continue to ask those follow-up questions until we're certain that the question's been answered fully. If instead of feeling shy, you're feeling a little bold and you want to actually ask your question live, you can click this button. This is the raise your hand button. That's why it's a hand with an arrow pointing upward in front of it. Leanne will do the same thing. She'll interrupt me at just the right time, but instead of asking your question on your behalf, she will unmute you and let you ask your question. We'll keep you unmuted until the question gets fully answered. So again, if you have follow-up questions, just keep answering them. Don't be afraid to interrupt me. Otherwise, I'll just keep talking. Now, with that said, and without further ado, let's take a look. Now, I've got tabs on my screen. Tabs is the time accounting and billing system. That's, if anyone has ever wondered what that means, that's what tabs means. Tabs 3 is the time accounting and billing system from Software Technology. And down here on my taskbar, you'll see the general ledger system, the accounts payable system, and the trust accounting system. And we're going to talk about how these 3 packages interact with this one here. Now, I'm going to give you the overview very quickly, and then we're going to go take a look. So as far as accounts payable and general ledger, you can think of those as what would replace QuickBooks. Sometimes people are confused by the fact that accounts payable is one program and general ledger is another. Don't let that confuse you. Those 2 programs together will form the equivalent of a QuickBooks type system. The reason they're separate is because sometimes Tabs is in a much larger firm than other times. And in some of the larger firms, these 2 functions are very crisply defined. In other words, you have one person that just writes checks and doesn't get into general ledger at all except how it's integrated. And we have another person that may do the bookkeeping and really doesn't spend much, if any, time in general ledger. And so these programs have, throughout the years, for the past, gosh, 34 years, going on 35 years that Tabs and all these packages have been around. And for that long, these programs have been separated. Now, trust accounting is, again, a totally separate program, and it is kind of the 2 combined, but for your trust accounting. As you hopefully know, trust accounts, the bank accounts that you put other people's money into until you're going to take it for yourself or until you're going to disperse it in some other way, need to be totally separate from your other books. And this is one of the big problems with using QuickBooks or another non-integrated package to do your bookkeeping if you have trust account bank accounts. Because in QuickBooks, it's very, very difficult to set up a separate bank account that's for trust activity and not have it show up in your books. And so this is kind of the same sort of thing, a checkbook / accounting system for your trust accounting, and it's a totally separate thing. Now, it makes sense to tell you that the one thing that this does that these don't do is this keeps track of money that's being dispersed and money that's being put into the bank account, of course, as a whole for the bank account, but also on a different level for individual people who have trust money in the bank account. So it's a good thing to know that not only does the trust accounting system keep track of that trust account, bank account, but also individually the people's money that's in the system. And of course, that's what a trust accounting system does. Now, very quickly, I'm going to explain how the integration works between General Ledger, Accounts Payable, and Tabs, and then I'm going to show you. It's two ways. First off, if you are writing a check, sometimes they need to be applied to the appropriate statement on the billing system. So if you're writing a check for clerk of court fees or expert witness fees or filing fees, not only do you write the check and account for it, but you also need to make sure it gets onto the appropriate person's bill. Likewise, if you write that check for $100 to pay a filing fee and then you bill the client and included in that bill is $1,000 of fees, legal fees, $500 for Bob, $500 for Sally, then when the client pays you $1,100, Tabs knows that $500 of that is fees for Sally, $500 of that is fees for Bob, and $100 of that is an advance. And it can automatically, when you log the payment against the client's account in billing, push that through to General Ledger as fee income and advance reimbursement, or however you've got your books set up. Now, further, Tabs not only knows that 1,000 of it is fees, but it knows whose it is. So it can make that distinction in your General Ledger. It can push it through to GL as fee income Bob, fee income Sally. Or maybe you want it to go through to GL by location, fee income for the Pittsburgh office, fee income for the Wixom office. Or maybe you want it to go through by type of law, fee income criminal, fee income estate planning, fee income litigation. Either of those scenarios can be supported, and that's important to know because the bottom line is you want to do these things. You want to write these checks and log these payments and then have them go to all the right places without you having to do anything else. So let's look at that. Let's write a check. I'm going to go into Accounts Payable. One thing that people have trouble with is that they're called invoices, and if you're writing a check to the clerk of courts, for instance, you don't have an invoice. They have changed it very recently to make it look like a check, though, so that makes people feel comfortable somewhat. We're going to go ahead and say that we're writing this check today. Now, I have to explain that my demo data lives on November 15th of 2011. That's what it thinks today is. So that's why it's coming up with an invoice date of 11/15/2011. Now, if you had received an invoice from Office Max, it's probably 4 or 5 days old by now, so you would select the appropriate invoice date. Or, in the instance of a check to the clerk of courts, it's today, so you don't have an invoice number either. And I believe I said that we were going to write this check for $100. It pops up with the description and memo from the last time you wrote a check to this vendor, and I do happen to be doing this for Michael Larson, so we'd leave it. Most of the time you'd be doing a check for a different client, so you'd simply change that and let it carry through down to here. Now, when I go through here then, if I want it to, it will tell me that this is how it's going to post it into the General Ledger system. Now, you don't really need 99.97% of the time to care about this, because once you set up this vendor, you set up how this is going to post to GL, and then you forget about it, because at least for most of the checks that you write, it's going to post to exactly the same place that it did the last time. And then finally, when we save this, and I'm going to do that with this, it pops over to Tabs and says, okay, who do we bill this to? And I'm going to go ahead with Michael Larson. He happens to be my first client. Normally you type in their name and find their matter. We're going to use today's date. We're going to use FF for the transaction code, and as you'll see when I hit Tab, that means filing fee. We're going to automatically apply the remaining amount from that $100 check by pressing F2, and I'm going to save this. Now, you know that I like to talk. If I hadn't been talking and explaining what I was doing, in under 20 seconds, I would have written a check, accounted for it, and put it on the client's bill all at the same time. Before I even print the check, I have done all three of those things. There is nothing else to be done except print the check and hand it to the attorney who's standing in the doorway with his coat in his hands waiting to go to the court. You may wonder, why am I still here? Let's pretend instead that we wrote one check for $100 to FedEx, and it happens to represent 5 different next day air packages that we sent. So we would write one check. It would be accounted for as one item. But then when we go to apply it to client statements, we'd make one $20 entry here for Michael Larson, maybe another $20 entry for Sally Smith, and perhaps a third $20 entry for John Doe. Perhaps the other 2 overnight charges were firm-related and aren't going to be charged to a client. And then when we're done, we hit escape, and we're right back to where we started. We're writing another check. Now, Leanne is looking at me patiently. I think she might have a question. Leanne, do we have a question?
There is a question, and it is, if we have to change the APS cost entry in Tabs, it does not want to. Can you explain why that is?
I guess I'm not quite sure what they're asking. Maybe what they're asking is if they were now to go into Tabs and try and change that cost entry. Let's go pull up Michael Larson. And, oops, there we go, cost. And here's this filing fee. They're both the same, but this is the one I just did. I can change it here. No, I can't. That's why. It is because it was done through Accounts Payable. And what you need to do is you need to come back to Accounts Payable and pull up the appropriate invoice. So we go to the Clerk of Courts and we'd pull up reference and we'd find the check. Now, since these are all filing fees, because this is my demo system, I'm going to assume that this is the one right here. And then there is a way to go over to Tabs right there. And so I can change it here this way when I can't change it in Tabs. So the answer, I believe, to this question is if you wrote your check in Accounts Payable and then applied it to the statement, you need to pull up the Accounts Payable invoice and make your change there. Okay, now, later on, we get a payment in the mail after we've sent this bill out, and it's for $1,100. I'm just picking that number out of the air, and it's from Michael Larson. So now we want to enter the payment, and of course 100 of that is that filing fee. So we come in here to Tabs, and there are a million ways to get into the payment screen. I'm going to go into the Client Manager and pull up Michael Larson and go to the payment screen and add a new payment, and I'm going to make it for $1,100. Now, keep in mind, of course, we would have, in the meantime, printed a bill, sent it to the client, updated the statement. I happen to have other amounts of money that are due for Michael Larson, so this will work. But keep in mind, I have not really done all the things that I would do in between. We put in a check number. We edit the description any way we want, payment received, check number, whatever, because this check number is for internal purposes, whatever you want to appear on the bill, and we save it. And you don't see it, but in the background, it goes over to GL and posts that as income. Now, the reason it posts it then, and I'm going to show you the income statement, This is the income statement, and this fee income has increased by $1,000, and this expense income has increased by $100 because that's how we've got the books set up to integrate. Now, as I said, we can break this fee income down by attorney. We can break it down by a type of law. We can break it down by location. We can even do something called fee allocation, where money comes off the top of the payment. Let's say 30% was going to George, who originated the matter but did no work on it. And so in my example, that $1,000 in fees would come in, and $300 of it would go right away to George, and the other $700 would be divided equally or proportionally between the two people who did the work, Sally and Bob. But the bottom line is it gets over here to income and over to the income statement right away. So what that means is there's nothing to be done further to get this into general ledger. If I go over here to create a deposit slip, that receipt for $1,100 is going to be in here. Well, maybe. I have some sort of an issue here with my integration, but that receipt will be here for you to, oh, I'm looking at the reference. Thank you, Leanne. I'm looking over here going 100, 415. Yes, here it is. This is here now for you to include with all the other receipts in your general ledger deposit slip that you're going to take to the bank. So here's all the other payments that I've made today or in the last day or so since the last time I went to the bank, and this is there. There's nothing else to be done. The payment's made against the client's account. It's in the income statement. It's ready to be included in the deposit slip. End of story. Now, let me get out of here. Let's look then at the other side of this, the trust-related side. In trust accounting, there are two ways that you want integration to happen. First off, there's no integration when you write a check out of trust because you don't want to bill the client for that $100. Let's say you're going to write a check to the clerk of courts out of trust, and the client has given you $5,000 in advance, which you have put into the trust account. Well, you don't need, when you write that check for $100 to the clerk of courts, that's coming right out of the trust checking account and being applied against that $5,000 and reducing the trust balance by $100 to make the balance now $4,900. So there's no integration at that point, unlike when we write a check out of accounts payable where we're fronting that money, we're advancing that money out of the firm's operating account or perhaps out of a cost advance account. Doesn't matter. Here in trust accounting, when we write a check, there's no integration with billing. There is, however, integration with billing when you pay the firm. So let's say in our hypothetical example that we have now billed the client $2,500 through the billing system, and now we want to write a check to the firm or effect an electronic transfer, which is more likely the scenario that you'd use, to transfer that $2,500 from the client's trust account into the firm's bank account so that we can take that income. So when we write the check, we're going into trust transactions, and we're telling it we're going to write this check against Michael Larson's trust account. And it does support multiple bank accounts. Most often a firm will have just one. And we're going to write a check, and maybe it's going to be an electronic transfer, so we're going to leave this check number at 0. And the amount, I believe I said, was going to be $2,500. We can see right now that that's going to reduce the balance in the trust account. Before I put that $2,500 in, this balance is $9,500. And when I get done, it's $7,000. We can put a description in here, whatever you want. And then on the payee line, I'm going to put firm, which is a special designation. This special designation of a payee, you have codes for all your payees, the people that you pay, and you can add them as you go. You don't have to set them up ahead of time. So you write a check to a certain expert witness, or you write a check to the clerk of courts out of the trust account. You're using a code here. And when you use this special firm code, Tabs knows, hey, I need to integrate with Tabs and push this payment over there. And so then it will tell you how it's going to break down this payment, and it's just going to make a regular payment. It's going to let Tabs decide how to distribute that because of the way I've set it up. And when I save it, it's there. Not only have we now reduced the client's trust balance from $9,500 to $7,000, But if we go back over to the billing system and get into Michael Larson's Client Manager screen, this payment, I know why, because I didn't, hold on one second. This is the same thing that happened to Mary Jo when she demonstrated this the other day, trust transactions. This payment needs to be given a check number of some sort so that it thinks that it doesn't have to print it. It was waiting with the check number 0, it was waiting to print that check, and it knew that the trust account system had not printed the check. So we're going to go give it a check number, we're going to save it. Oops. And we're going to get out of here. And now when we go back over to Tabs and refresh in the Client Manager with Michael Larson, now we have that additional $2,500 payment. Now I should point out that once that $2,500 payment hit Tabs, Tabs then did the other things that it would do with a payment. So here we've written a check or effected an electronic transfer of $2,500 from trust, reduced the client's trust balance by $2,500. It automatically creates the corresponding payment entry in the billing system. And when that happens instantly, it also automatically took that $2,500 and pushed it over to General Ledger so that we now have that there to include in a deposit, or to, if it's an electronic transfer, we'd create a separate deposit slip for it. And it's also now in the income statement. Now, of course, as you're guessing, this assumes that everyone's operating on a cash basis. 99.97% of our clients operate on a cash basis, which means you show the money in your books when you get the money in your hands, which is exactly what's happening here. Now, the other way that we have that we can integrate with trust and billing is for more of an informational purpose. So if we go and we print a statement for Michael Larson and preview it, one of the things that's going to be on there at the very end is a recapitulation, if you will, of the trust. Now, it can appear in a number of different ways. This one is a summary, meaning it simply says, here's your opening balance, here's your closing balance. You can have it, A, not appear. In other words, if a client has a trust account balance or a trust account, and a statement is printed for the matter, it can either not show this, it can show this summary, or it can show the detail. And the detail would be that we started with this much, we did this, and we ended with that much. Now, the reason it's showing this way is because we haven't printed that statement. That we're not really doing all the steps here. So here we've got a 7,000 start and a 7,000 end. That's simply because of the way we're doing this to demonstrate. But those are your 3 methods of showing trust activity on a bill. You can either not show it, you can show the summary, or you can show the complete detail listing every transaction in between the opening and closing balance. And that's done on a matter-by-matter basis. So you can say, we are going to show this trust activity for this matter, we're going to show it in summary form for this matter, and we're going to show it in detail form for that matter, and pretty much set up each individual matter to show what it should. Now, Leanne is once again looking patiently at me to indicate that she's got another question.
Okay. The question is, we cut trust checks and apply them as prepaid amounts before running final invoices. Doing it the way Paul is showing, will the amounts apply as prepaid before final bills are run?
Yeah, some firms do it the way I'm showing, others do it after the fact. I think that's what they're asking. Different methodology. I'm showing one way of doing it. It's a matter of when you apply it. Some firms will go ahead and print the bill, send it, and then apply the trust payment so that that trust payment shows on the next bill. Other firms will print the bill and at the same time apply the payment and have it all show up on the same bill. I think that's what this person is pointing out, and really it's just the same methodology as far as how you do it, just a matter of when you do it in relation to the printing of the final statement and the presentation of that statement to the client. So that, in a nutshell, is how the integrated accounting works. We've pretty much seen all the different aspects of it. We've seen a check be written and go into the bookkeeping system and go into the client's bill all at once. We've seen a payment being entered into the billing system to reduce a client's balance and then be pushed through to the accounting system all at once. And we've seen a trust transaction being prepared where a check is being written to the firm, and that causes the corresponding payment to reduce the client's balance in tabs to be created automatically, and of course, which then pushes it through to general ledger. Are there any more questions, Leanne?
There are no other questions, Paul.
Okay, well, I am going to cut it at that. That is how it works. If anyone does have questions after the fact, I'll give you my email, which is paul.purdue@attorneycomputersystems.com, and it is Purdue like the school, not the chicken. So that means it's P-U-R-D-U-E, paul.purdue@attorneycomputersystems.com. Everybody have a good rest of the day and a good weekend, and we will see you next time. Thanks much.